Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video is for Monday, October 8th, 2012. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. Well, folks, the markets again are hovering to the downside. Last night when I went live to a live broadcast to my members, I talked about a most likely down week on Wall Street. Not big down, though, and I think that's the key here. We want to make sure we understand that there's not going to be a major fall on Wall Street, but I do think, based on the reversal from Friday, it does bode slightly negatively for the week. And you can see this is Friday's action on an intraday SPY chart, which mirrors the S&P 500, and very, very clearly you can see the fade here. So you opened up sharply on Friday morning on the jobs number and the unemployment report, and it faded all day long. That led to the gap down today, and we're hovering right here sideways right now, basically from the gap down. Spiders are down 55 cents on the day. Dow is down 28, NASDAQ down 26, S&P down about 6 points. NASDAQ is down quite a bit today, down almost 1%, while the other indexes are just slightly neutral to down. And the reason being is Apple and Google. Apple and Google are both getting hammered. So that's really the name of it, but we'll continue to follow here. Spiders have a small bullish pattern here, folks. Again, I repeat, small bullish pattern. I am short-term long on the spiders on a day trade right now based off this bullish pattern above the 50, above the 20 MA. So if this can break up, it should go to the 50. I'd like to ride that out. We'll see how it goes over the course of the video as I do it and see if it plays out. Now, a couple other things to go over here. Number one, even though you have a short-term bullish pattern, this is a longer-term bearish pattern. The bearish pattern starting from up here, coming down, and then the sideways consolidation. So again, micro bullish for a day trade, macro bearish for a swing trade. That's how you position yourself as the market continues to uptick here off this beautiful little bullish pattern setup. All right, if you don't understand bullish and bearish patterns, folks, then you've got to join here. I mean, it's a no-brainer. I make more money than anything knowing PPT, which is price, pattern, and time factors. All right, it's a PPT methodology, proprietary here at InTheMoneyStocks.com. We will teach it to you. There's a 7-day free trial here at InTheMoneyStocks.com as well. Very easily done, very easily made, and again, profits just start to flow beautifully. All right, a couple other things here as the markets continue to uptick. I may take half off the table if we get up a little bit higher here, and then hold the other half for the 50 MA. I have a nice position, so I'm already in the money very nicely. Again, the bullish pattern buy was right here at the 20, and then you upticked, and then uptick again, as we've been seeing here. All right, looking at Apple today, Apple's getting crushed, but Apple is at a master level, and I want to make that clear, folks. The lows here today, you may think that's an arbitrary number. If you do, then you're not really good at reading the charts. It's that simple. All right, what do I mean? Well, what I want you to do is just zoom out, zoom out, zoom out, zoom out. I know it seems like a lot of zooming, but you got to be able to do this. See this gap fill right here, going back to the 16th of August. Take that, drag it right across, and look at that. Gap fill. So that's a major gap fill on Apple, and that's what was filled today. And I look at that, 1, 2, 3, and now it's starting to push up. Now, if you saw that ahead of time, like our members did, you bought Apple. I know a lot of our members in the intraday stock chat bought calls this morning when we got down there, and they're already making huge amounts on those positions, in addition to day trades. All right, buying Apple at that level. I mean, just look at the first hit right here. Look at the bounce you got on this thing, from basically 637 or so all the way back up to 642. $5 bounce on Apple in a matter of 20 minutes or so. And then sure enough, it comes back down, pops back up, etc., etc. So again, we'll see how things play out here, but nice to see Apple coming off that level. I'm neither a bull nor a bear when it comes to any particular stock or market. I just play the levels, and I make money on all sides of the market, folks. All right. Another stock getting hammered, Google today. All right. I do think Google is overdone. I love the bearish pattern it's beginning to make here on a macro scale. Micro, there's really not much bullish there, to be honest. I mean, we had a micro bullish on the spiders, but you don't really see that here, as again, it's kind of consolidating even here on a bearish manner. Google's down about $12. Beautiful fall today. I love that. And again, we'll follow this very, very closely. So you can see the daily chart of Google extremely extended. We're just about into earnings season, so that's going to be another very intriguing little aspect of the way things are going here. And again, what I like about this is really you're looking, the best thing to do here is to see a close on Google in the next couple days below this line. There was a little topping tail here you got above it. If you can get back below that, it's very much in play. Not necessarily a topping tail, but just the bearishness of the chart. And then the 20 MA would be next, and then all the rest down and so forth if you break the 20 MA. Lots of good stuff on these charts, folks. JPM is slightly lower. Amazon is slightly lower. Goldman's slightly higher. But again, the big leaders today are Google and Apple to the downside. Those are putting pressure on this market. Again, it's all about trading the charts. The charts are your friends. Read them properly, and you can make them a lot of money. Just checking back on my short-term day trade here, you can see I'm still holding. I'm still in the money very nicely. Again, my entry right down here on the 20. You have a beautiful uptick here and sideways consolidation into that. And then I'm looking for a continued pop here. Again, I may or may not keep a break even here. Most likely break even I will maintain at the 20 MA. Right around the 145.53. That's my average entry price on the spiders right now. So I'm up about a dime, 11 cents, which, you know, on a few thousand shares, 4,000 shares of the spiders is not a bad gain by any stretch. But I'd still like to get a little bit more out of it. I'd ideally like to make 15 to 20 cents first half and then let the rest run to this pivot point right here. All right. Let's see what else we have here. Dollar today is trading slightly higher on the day. So again, higher dollar, we know what that means. It means a weaker market. So that's going to be intriguing there. And again, the higher the dollar goes, the more pressure on the market. And if we look at the GLD today, what do you think the GLD should be doing if the dollar is stronger? And the answer is it should be lower, right? Stronger dollar, weaker commodities. Sure enough, GLD down 59 cents. SLV is down 52 cents. And the USO is down 19 cents. So it makes sense across the board. Seems like the market's functioning properly. Dollar up, market down, commodities down. And again, interesting enough, look at Google and Apple. Those are the two keys today to the market's action. Those are keeping the NASDAQ under extreme pressure, down about 25 points, while the other indexes are just down a few points or about 1/4%. All right, guys, come here, join inthemoneystocks.com. Take the 7-day free trial to the Research Center, which gets you your all your alerts, trading alerts. You get videos every day, market reports, proprietary technical guidance. Again, 7-day free trial geared towards swing traders and investors in the Research Center. If you're a day trader, the intraday stock chat is for you. I'll be making more money this afternoon, folks, and I'll talk to you soon. Take care.